While a lot of folks are bracing for a tough economic year, one company just dropped some surprisingly strong holiday season numbers. That company? FedEx. And what their latest report tells us about their future strategy, well, it's a masterclass in how to transform a giant. So let's dive in and see how they're remaking themselves.
So, back on December 18th, 2025, FedEx released its latest results. Now, this report is a huge deal because it covers that peak holiday shipping season, from September all the way through November. It's basically the ultimate stress test for their entire global network. And the headline number? Whoa, it was a stunner. A 19% year-over-year jump in adjusted earnings per share. Now, that's just a key way of measuring profitability, but a leap that big? It really makes you sit up and pay attention, especially with all the economic headwinds out there.
Which, of course, brings us to the big question, right? How in the world did they manage that kind of growth and profitability? Well, I can tell you it wasn't just luck. It's the result of a massive, deliberate, and probably pretty difficult transformation that's been happening behind the scenes.
All right, first things first. Let's just unpack the high-level results that made this quarter so impressive.
The report was just solid top to bottom. We're talking really good revenue growth, better profit margins on what they do, and that amazing high teens earnings growth we just saw. But what's really crucial here is they pulled this off despite what they call significant external headwinds. In fact, they felt so good about it, they actually raised their financial outlook for the rest of the year.
Okay, so the big picture numbers are good. But to really get what's going on, we need to pop the hood and take a look inside. Which parts of this massive company are actually hitting it out of the park, and which parts are maybe facing some challenges. Before we go any further, there's a key term we've got to get our heads around: yield. Just think of it as how much money FedEx makes on every single package they handle. See, if they can increase their yield, they can get way more profitable even if they're not shipping a ton more boxes. It's all about working smarter, not just harder. And boom, this slide just lays it all out crystal clear. The main Federal Express division, the one that brings all those packages to your door, saw its revenue jump up 8%. But then look at FedEx Freight. That's the part that moves huge shipments on pallets for big industrial companies. Its revenue actually went down by 2%. A really clear split is starting to show up here. Now, this is where that yield idea really comes to life. Just look at this chart. You can see strong, positive yield growth pretty much across the board for all the package services, priority, ground, even international. They're making more money per package. But over on the freight side, yield is basically flat. This tells you the real profitability engine is firing on all cylinders in that core package business.
And hey, this isn't just about them raising prices. It's also about how many packages are moving. Check out the momentum in U.S. domestic packages, climbing steadily to an 11% increase in November, smack in the middle of the holiday rush. Now, contrast that with the freight shipments, which were down 4%. This gives us a really interesting snapshot of the economy. Regular people and businesses are sending a lot of packages, but that heavy industrial shipping is lagging a bit.
So this split between packages and freight, it's not some accident. It's actually a huge piece of a much bigger story, a fundamental shakeup of the entire FedEx company, and it's laying out the blueprint for their future.
See, these strong quarterly results we're looking at, they're really the first signs of this massive transformation paying off. For years, people have kind of criticized FedEx for running its different divisions, like the air-based express and the road-based ground, almost like separate little kingdoms. Well, now they are finally tearing down those walls.
So how are they doing it? Well, the strategy really boils down to a few key moves. The huge one is called Network 2.0, which is all about combining the express and ground networks into one super efficient system. Then you've got Tricolor, which is a similar idea for their international air routes, and all of this is happening alongside some deep cost cutting to make the whole operation leaner. But the boldest move of all has to be this. They are completely spinning off the FedEx Freight division. The plan is that by June of 2026, it's going to be its own separate publicly traded company. The thinking here is to create two more specialized businesses, one that's hyper-focused on package delivery and another one that's dedicated to that big, less-than-truckload freight.
So how do you pull off a restructuring this complex, this global? You can't just do it with spreadsheets and phone calls. The key, the secret sauce that enables this whole transformation is technology. And specifically, we're talking about data and AI.
You can almost think of technology as the central nervous system for this whole transformation. Trying to manage millions of packages through a brand new combined network, that takes an incredible amount of intelligence. Data lets them see the whole system at once and make smarter, faster decisions. And this isn't just some little side project they're tinkering with. No way! FedEx is scaling AI adoption across the entire company. They're even figuring out how to create totally new sources of revenue by selling their logistics insights as a service. And they're not going it alone. They're teaming up with major tech players like ServiceNow to get it done faster.
And if you want proof of just how committed they are, look at this. They are rolling out customized AI training to more than 500,000 employees. And get this, the training is tailored to each person's specific job, whether they're on the loading dock or in the corner office. The goal is to make the entire workforce fluent in AI.
So with this huge transformation happening and a really strong quarter in the bag, what does the company actually expect for the future? And maybe more importantly, what does that signal for the rest of us? Well, their official forecast paints a picture of what I'd call cautious optimism. They're expecting solid 5 to 6% overall revenue growth, and that's going to be driven by continued strength in the U.S. package business. But they are bracing for more pressure on international exports because of the global trade situation, and they think the freight business will be flat to slightly down right before it gets spun off.
This one phrase from their report really captures the whole mindset: planning for strong growth and focused execution. See, it's not about growth at all costs anymore. It's about smart, profitable growth. And it's driven by this relentless focus on efficiency and actually executing their big transformation plan.
So here's the thing. FedEx is often seen as a pretty good barometer for the global economy. So their detailed outlook, strong domestic consumer activity but some weakness in international trade and industrial freight, it gives us this fascinating real-time peek at the forces shaping our world. And that leaves us with a final question to think about. What does their focused optimism really signal for the year ahead?